Welcome back to Everything Money. In this video, we will provide you and you will learn about our thoughts moving forward with an update with Alibaba and its stock. This is our biggest holding and one of the best value plays we think we've seen in a long time. We'll go over the financials and remind you how great this company is growing. We'll show you what you should be paying for Alibaba using our stock analyzer tool and our amazing software. And if you want to trade Alibaba, you will join Mo and that glorious Bitnass Nation. He'll show you how to use the charts and trends to trade this stock. I bring your questions about Alibaba, its recent fall, to a couple guys that own and operate over $100 million in multiple businesses, real estate all over the world, and stocks. They'll help us through this crash and fondle our thoughts moving forward, why we love Alibaba. Here's Paul and Mo. I love you guys. Come on in.
Thank you, Seth. So first off, guys, follow us on Instagram, Everything Money Investing, and follow Seth Mo's and I's. Is that how you say it? Seth Mo's and I's?
I love that. I love that.
Is that good? Instagram accounts, because it helps inflate our fragile egos. All right, so guys, Baba is in the news a lot. China's had some restrictions. All Chinese stocks are in the news. Baba's down a ton. So let's go to our Everything Money software. We're going to go to the 8 Pillars tool. We're going to type in Baba. Look at the stock. Look at this stock. $310 back in a little over a year ago, 14 months ago, it was $310, $320. Now it is $122. It hit a low of 108. This has not fazed me at all. Everybody's scared that Alibaba is going to be delisted. This does not worry me.
Paul, can I ask you a question?
Absolutely.
Between that 300 number you just told me and whatever today's price is, what has changed in the company?
That's exactly it, guys. So the amazing part about this is the issues that are happening with Baba were issues that were potential a year and a half ago. The VIE structure, China talking about clampdowns on technology and fines. It's like, so all of a sudden, you know what it is? It's everybody's seeing the price fall and they're just going to exaggerate more and more and talk more and more about the negative news. It was the issue back at 310. Doesn't mean the issue was wrong or right, but I still wasn't worried about that issue back at 310. The reason I didn't buy at 310, even though I think there was a justification for it, was because I didn't understand the number. I didn't know if I could trust the numbers out of China. And then this brilliant man named Charlie Munger, I found out he was buying Baba, and I'm like, okay, if he trusts the numbers, I trust the numbers as well. So that's the difference. So the market cap of Baba is now $330 billion. It was almost $1 trillion before it fell. First pillar. In our 8-pillar analysis, we want the 5-year PE under 22.5. It's 19.8. For a fast-growing company, this is low. Pillar number 2, we want the return on invested capital greater than 9%. It's 10%. Check mark there. No dividend. 5-year average free cash flow of $18.6 billion. Last year's of $30.8. Boy, what a crappy company.
Yes, it looks awful. Pillar number 3 is revenue growth over the past 5 years, Paul. Show how this puppy's growing.
Yeah, so we go to the income statement of our exclusive software. 5 years ago, it did $31 billion. Last year, $128 billion.
Oh my gosh, look at that.
Yeah, so over 4 times larger. Pillar number 4, net income growth in the last 5 years. $9.5 billion, $19.5 billion. I'm actually kind of surprised it's not bigger, but that's okay. It's only doubled versus revenues up 4 times. Pillar number 5, we want shares decreasing so they are not diluting us as investors. We want less shares outstanding. So we go from 2.55 billion up to 2.7. So it's a little increase, but not a ton. So I'm okay with that. It is still an X, but it's not as bad as it could be. Pillar number 5, we go back to the metrics main page of our exclusive software.
Pillar number 6, I love you.
Sorry, pillar number 6, we look at our 5-year average free cash flow. What we're trying to do here now is say, how much debt can they reasonably have before we start to get worried? So I take this 5-year average free cash flow, $18.6 billion, I multiply it by 5. That gives me $93 billion. I want their total long-term liabilities being under $93 billion, because just like you as an individual, the less debt a company has during bad times, the better off they're going to be, the more likely they are to survive. And in the game of business, it's about survival. In the game of business, it's about survival. I don't know what I did there.
Leave that out.
We want it less than $93 billion. Go to the balance sheet of our exclusive software. Scroll to the bottom, $37.6 billion. Seth, last year they did $30 billion in free cash flow. They could almost pay it off in 1 year.
Yeah,
All
it's
right,
amazing.
now for the grandpappy of them all, pillar number 7, free cash flow. So we go to the cash flow statement of our exclusive software. And folks, free cash flow is cash from operations, less your capital expenditures. And you can do one of 5 things with it: buy back shares, pay dividends, pay down debt, make acquisitions, or invest back in yourself. So we added this line to the free cash flow statement to make the math easy for you. So 10.24 billion to 29.58, chickadee check. And we then take the final step. We take the 5-year average free cash flow of 18.4 billion. We multiply it by 20 as a starting point for a market cap. Obviously, the faster the growing company, the higher the multiple, the slower the growing company, the lower the multiple. But as a starting point, we multiply by 20. So 18.4 billion times 20 is $368 billion. And the current market cap is 330. It is a check mark there. So go to our 8 pillars tab to give our quick recap. It's all check marks except for the shares outstanding. And the shares outstanding don't worry me a ton. It's there. But I look at this going, oh my God, this is a company that's growing really fast. So let's go to the stock analyzer tool and see how absurdly overpriced it is. Sorry, underpriced, undervalued. So 10-year analysis. I'm going to fly through these myself. Guys, look how conservative I'm going to go here. In the last 5 years, they did 42.6% a year revenue growth. I'm going to go 10, 15, and 20% revenue growth.
Too low.
Profit margin. Maybe so. Just hear me out here, Seth.
Okay.
Profit margin. I'm going to go 15, 18, 21. Free cash flow margin. I'm going to go 18, 20, 22. Oh, sorry. 18, 21, 24. PE. I'm going to go 14, 16, 18. Same with free cash flow. And then I'll do 12.5% return because you can invest in the ETF and get 9 or 10%. Might as well get a little bit better with some margin of safety in there to buy an individual stock. Analyze button.
Wow.
It's all green. So my opinion is that I'm okay owning Hong Kong shares of this business, and that's the risk I have. I've talked to Merrill, Mo's talked to Schwab, and they both said if it gets delisted, they'll get the shares in Hong Kong, and your biggest concern is if you ever want to liquidate, it might take 3 to 5 weeks to get your money. So as long as I believe in the business, what do I care if it's the Hong Kong exchange or the US stock exchange? In fact, the Hong Kong exchange is actually better because due to the VIE structure here in the US, I only get access to their cash flow, not the actual assets of the business. If I convert it to Hong Kong shares, I get assets of the business. Sounds pretty good to me. So I'm a buyer of Alibaba. I started buying at 184, and I just got exercised some shares the other day at 130. I think my cost base is around somewhere in the 150s right now. So it's still high. I'm still down a lot of money on it, and I'm okay with that.
Mo, remind people about Mohnish Pabrai's stance on Baba and why he recently sold in the last quarter.
So it's funny, everyone was like, oh my God, why did he sell? Why did he sell? He did it for tax harvesting reasons, and he liked another company more. And the way that he explains it in our interview, so go watch the interview, but he explains exactly the reason why he sold. And it was advantageous to his fund, and he liked another company more, and it all worked out for him beautifully. So he decided to go with Tencent, or is it the parent company Process? Is that right, Paul?
Or Naspers, yeah.
Or Naspers. So that's it, guys. Even when we spoke, I was talking to one of his analysts, and I started talking about this VIE structure, and he looked at me like I was half nuts. Like,
yeah,
who cares? What are you talking about?
Yeah, so, that's true.
But here, he didn't say what he's talking about because he didn't know.
What's that?
He didn't say what he's talking about because he didn't know. He was just like, who cares?
Yeah, who cares?
By the way, listen, I didn't care, but I could be wrong. It was funny when we started to worry about this. Mo and I did more and more research. And as we did more and more research, we're like, hey, we kind of actually hope this happens.
I mean, I was in the Baba chat last night in our Discord, and I literally said, guys, I'm on the board. I'm on the side of now. Let's just delist it, because what has caused all of this chaos? It's been the news and the media and the social media. Get rid of all that. Just get back to the basics of what you're buying the company. If it takes getting delisted, just delist it and move on. And let's be on our merry way, because everything else is just noise.
And my selfishness is I already have a big enough position in Baba. So I'm not looking to add a ton more shares here. It's, when it was 184, made our first buy, I was like, okay, I hope it goes down because I wanted to buy more shares. It went up to 210. I was like, oh crap. And then it fell. But now I'm getting pretty close to my maximum exposure per stock of 3%. So I just wanted to go back up now.
Yep.
If this style of investing and looking at numbers resonates with you, you can join our community. You can have the software, and Paul will tell you in all of his grace how to get it right now. Go ahead, Paul.
So guys, we created the software because early on in the channel, our subscribers wanted to be able to analyze their own companies without having to wait for us to make videos. So we just merely made the software. Now, granted, it took hundreds of thousands, but it is now here. You can join it now. Here's what you get. You get everything you saw in the video we just did. You get everything in the mobile app. This is all mobile friendly. Carry anywhere you go. If you're on the bus, anywhere you can use it. You get 30 years of financial data. You get that stock analyzer tool, our most important aspect. You get exclusive daily content, between 1 and 3 videos every single day, just from us, only for the users of our software. You get access to Seth, Mo, and I. You get all the future growth of the software too, which includes real estate calculators, stock screeners, and most importantly, what's active right now, you get access to our community of like-minded investors. So many people around the world are alone in how they think about investing. But in our community, over 6,000 people are talking every day in organized chats, talking about all of their favorite investments, why they look at them, why they don't. This includes crypto. This includes Tesla. We're not discriminating against only value. It's all types of investing, all available for you for only $1 per day. Less than a cup of coffee, $1 a day. Whatever price you sign up for today is locked in for the future. Sign up now. There are 2 ways to sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com is if you sign up right now, you get no sales tax for quite a while because we're not big enough yet. So as you saw, compared to our other competitors, we are vastly more cost effective, and you get just as much, you get more than you get from the competitors. So sign up now, everythingmoney.com, $1 per day.
And if you want to trade Alibaba at a quicker pace, you can join the Bid and Ask Nation, and Mo will fondle your fancy every day as he guides you through trading. Go ahead, Mo. What do you got on Alibaba?
So I've said this for a long time. I don't necessarily like trading Alibaba from a long-term perspective over here. And it's just because you have this movement of up and down and these big swings, and that could get you in some deep trouble. I would rather you come over here to a swing trading chart and trade it on a day-to-day basis. Take advantage of, so you have this gap. This gap will fill. It might fill and then come right back down here. So what I would want you to do is come over here, short this down, come through the sweet spot, run it down. When you get this little pop and it moves back up, jump on in there on this big day and try to get 2 days here and there. Again, right now, I would pay attention to this thing. You're getting a nice engulfing candlestick today. Your volume is a little bit weak, but that's not surprising going into the holidays. Say we get a boost of volume and you create a nice engulfing candlestick. Run this right up to the 25-day moving average, or if you're lucky, it could run to the 50-day moving average. Make sure that your red line is over yellow and you'll be on your way. This can be a very good swing trading stock just because it is very volatile. Even more volatility helps day traders. So come over here on a day trading chart, 15-minute chart. You got this morning, we actually did have people in the Bid and Ask Nation. I was in the day trading chat this morning doing some paper trading with them, and there were people that caught this thing and ran this thing, and they might still be in it. Nope, they exited at some point today, but you could have been in this entire day, really. Entered here and just made your way out through the entire day making profits. And this was a very big day. I would have been adding around. Let me pull out my tweezers. I'm trying to remember. I think the kid added, he added at 120.36, somewhere in this range, if I'm remembering correctly. And he would have exited somewhere in this 122.40 area. So it's a pretty good day just for sitting on a computer and doing nothing. So if you want to learn these rules, if you want to day trade with me and Paul, come and join us in the Bid and Ask Nation. You get my Trading 101 series, which is all of these rules that you will need to be successful. The Employed Trader series, which is 6 stocks that I go through every single day. My exclusive Saturday seminars, I do 1 a month, open to the Bid and Ask Nation only, and you get to ask any questions you want to. And Discord community, which I just talked about, of 950 plus people, all talking about trading. Come and join us.
Paul, remind folks real quick the exciting news about you entering day trading one more time. Let them know what you're doing.
Yeah, so there's a past video of ours. Go check it out. I'm going to be investing $500,000 of my own money, day trading every day with Mo and 4 or 5 of our Bid and Ask Nation participants. We're going to day trade. Each one of us is going to watch 3 or 4 stocks at a time. We're going to go into a chat, a live video chat, and record. And it'll be live for any Bid and Ask member. It will be recorded and then released later to everybody else. So it's awesome. I'm excited about it because I want to generate some cash on the cash that I have sitting around.
That's our take on Alibaba. Final thumbs up. We will keep you updated on one of our favorite stocks. And my biggest non-ETF holding, Paul, is Baba. So is it the same for you, right? Is it?
Yeah, it's my largest individual holding.
Yeah, there you go. All right. See you next video, guys. Thanks for watching.